And welcome to Trading Nation. We are joined by Michael O'Higgins. He is the president of O'Higgins Asset Management. He is also the author of Beating the Dow, where he popularized the strategy now known as buying the dogs of the Dow. Michael, welcome. Good to chat with you. Thanks for coming in.
Thank you.
All right. You brought along 5 different names. Are they just straight dogs, or tell us about your investing strategy?
Well, the name actually was not, I was not the one who named them the dogs of the Dow, but they are the highest, they're the lowest price of the 10 highest yielding stocks, which have done even better than the 10 dogs, which have averaged about 13% a year since 1972, whereas the 5 dogs, that they're my favorites, the lower price ones, have averaged a little over 15% a year. But they're all high-quality companies. They're paying a steady dividend, and they're certainly stocks you'd want to own.
Well, let's talk about them. What are these 5 stocks that we would want to own?
Well, the first one, the highest dividend yielder, is Cisco, and as everybody knows, they design, manufacture, and sell Internet protocol devices. The next one is Pfizer, large pharma company. One of the, I think it's the largest in the world. Coca-Cola, we all know what Coca-Cola does.
Mm-hmm.
Verizon, a giant telecom company, and Merck, another giant pharmaceutical company. All very solid, paying good dividends, and should be good holdings for the coming years.
You know, it's interesting, Nike is not on your list. I mean, Nike, the biggest dog of all this year, I mean, down almost 18 or 19%. The only company down double digits in the Dow by far. The second worst performer is down about 3%. Is it just because the yield at 1.4% is simply too low for you?
Yeah, it's not even close. I mean, Nike is third from the bottom in terms of dividend yield. It's only beaten on the downside by Goldman Sachs and Visa. So listen, it could be a great stock in the future, but it doesn't meet our criteria.
Yeah, and I guess when we look at your criteria, how much of it is straight dividend versus, say, Michael, the fact that the stock is, I don't use the word cheap because that's a value judgment, but the price has fallen on Nike so much. At what point does that outweigh the meager dividend, if ever?
Yeah, believe me, it's fine for other people that want to do more in-depth analysis. The whole purpose of this exercise is to allow ordinary people who don't have the time or expertise to do sophisticated analysis to end up with a winning portfolio year after year.
And are you optimistic broadly for 2017?
I really, look, the market has gone up, 8 years in a row. The dogs of the Dow have beaten the Dow 7 years in a row, which is the longest winning streak in history. So given the fact that trees don't grow to the sky, I would say there's a good chance that both stocks and the dogs of the Dow may not do so well in the near future. But still, if you have a portfolio that's paying you an average of north of 3% yield, when 10-year Treasuries are paying 2.5%,
yeah,
and you have money being another 3 or so % being reinvested for you in the company, I think it's a safe bet if you stick with it. It's not a strategy that one jumps on in a given year and then abandons it. In fact,
this is a year in, year out. Believe in it, live it.
Yeah, well,
do
it's
it.
because generally after things have not worked for a while, they're more likely to work in the future if it's a well-founded strategy.
Well said. Michael O'Higgins, president of O'Higgins Asset Management. Michael, it was a real pleasure to get you on Trading Nation. We appreciate your insight. Thank you.
Thanks for having me, and have a Happy New Year.
You too. Happy New Year as well, Michael. Thank you. And folks, Happy New Year to everybody from the Trading Nation. It's been a great year. We appreciate you tuning in to the many, many segments we've done. So have a wonderful New Year, and we're going to see you in 2017.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.